Some breaking news out of Southwest Airlines. Phil LeBeau joins us now with more. Hey, Phil.
Hey, Joe, we've got a number of announcements from Southwest Airlines, including the fact that it has new guidance for the third quarter. The company's new guidance revolves around revenue per available seat mile. It is now expected to be up 2 to 3%. The previous guidance was for it to be flat to down 2%. The other news just coming out from Southwest, changes that the company plans to make to enhance its revenue generation. This is all part of the investor day that's going to be outlined later today. Among the new changes, international airline partnerships. It's going to be offering vacation packages and enhanced frequent flyer rewards. It is also going to be working on the cost side of the equation by minimizing hiring and targeting $500 million in annual cost savings. They are targeting $4 billion growth in EBIT by 2027. Lots of changes will be outlined during an Investor Day presentation that starts a little bit later on this morning. And then this afternoon, we will be talking with Southwest CEO Bob Jordan about the changes and the plans here, including a new board member who has just been named, former Spirit Airlines, as well as AirTran CEO Bob Fornero. He's going to be joining the Southwest board immediately. As we all know, we're watching to see what happens with the Elliott Group's plan to potentially call an investor or a shareholder meeting where they want to have their own slate of directors appointed. That will be part of the conversation with Bob Jordan this afternoon as well. Guys, I'll send it back to you.
Phil, would you say Southwest is its very aggressive expansion plans are getting reined in a little bit? What happened with Atlanta, and why would you do less?
The cost. Too costly is the easiest way to say it, Joe. And Atlanta is a good example where it's a highly competitive market. Everybody knows that Delta is based down there. And they were out of position in terms of the aircrafts that were positioned for routes and flights out of Atlanta. And that's a big part of what they're going to be announcing today. They have got aircraft that should not be flying on certain routes. They're too large. At this point in their growth plan a couple of years ago, they expected to have Boeing 737 MAX-7s, the smallest version of the MAX, which would be perfect for certain routes. Well, that hasn't even been certified. Not sure we're going to get that until 26, 27. Nobody knows for sure. As a result, they've got MAX-8 models, which are larger, less efficient for certain routes. And that's what they're going to have to change here. They are out of position in certain areas, and their cost, because they've hired so many people expecting to grow, they're not where they need to be. And so that's going to be part of what Bob Jordan talks about today, in addition to enhancing revenue growth. That's the plan at this point.